Welcome back to Fast Market, everyone. Kevin Hinks and Joe Mazzola back for our cash tag segment. Now I'd like to bring in Miss Megan Brantley. She is the Vice President of Research at LikeFolio.com. Megan, thanks for coming on. We have a theme for today, Megan. Some stocks that have run a long way and are maybe looking a little toppy. You're bringing us Netflix and, well, frankly, the list is quite long of companies that have run this way, but you're looking at Netflix, a name in streaming, Megan, that is dominant when you look at the weakness in other streamers. Go ahead.
Yeah, so the first time just internally at LikeFolio when Netflix really caught our eye was actually back in September of last year, because we saw the company kind of start to gain some steam, at least in the eyes of consumers, and its shares had sold off dramatically. And so now, obviously, this is the name that has rallied tremendously since then. We saw it post a really surprising report, at least in regard to that new subscriber growth, which was the key metric that we were really zoned in on. And so now when we look at Netflix, I think the question that a lot of people are asking us is, okay, is there still gas left in the tank? And what we do is we like to look at what consumers are actually talking about. And I think that this chart is really important because this is the actual viewership chart. So these are consumer eyeballs on screen. So when it really comes down to it, this is what matters. Which company is capturing these eyeballs, and you can see that Netflix is almost like it's in its own realm whenever you compare it versus other streamers. We saw Disney come out with a pretty disappointing report, at least in regard to the streaming side of things, but we're not necessarily seeing this out of Netflix. And I think that the company has made some really strategic decisions, adding a lower cost ad tier. So now all of a sudden you have this new component of revenue capture that's possible moving forward. We're starting to see the company, crack down on password sharing, which has definitely caused a big stir in some of our data as of late. And then, just in general, though, Netflix so far, what seems to be doing the best is just providing that original content that, as much as consumers may not like to admit it, this is what they're watching, and this is what's grabbing their attention. So for us, this is one that we're not quite willing to count out just yet.
Megan, let me ask you this. So clearly, consumers are making the decision for their streamer, right? They're no longer sitting at home all day, and they've decided that Netflix is going to be the streamer of choice. That being said, we've been looking at services pricing pressure because people are out and about. At what point does Netflix kind of cap, even though it's doing well relative to Disney, Paramount, and some of its competitors, at some point you can only have so many eyeballs. Where do you see that happening, or do you see this momentum carrying forward for the next couple quarters?
I think that that's why kind of this password sharing crackdown is going to be really important for Netflix, or that's a topic that we're tracking really closely because, a lot of household and a lot of eyeballs are on Netflix, and a large percentage of those, or a decent percentage of those, aren't necessarily paying for the company's service. So I think that kind of conversion over to capturing individual subscribers versus and kind of weeding out some of the free riders along the way, if you will, I think is critical. I think there could be some near-term headwinds. We've seen sentiment drop since Netflix kind of announced these plans. Sentiment has dropped by about 7 points. And so this is something that consumers, it's almost like taking candy away from a little kid. They don't like it, but that doesn't mean they don't want the candy, right? So I think that this is going to be an interesting trend to see play out, to see if Netflix can capitalize on this. I think it does help, too, that Netflix is now introducing this advertising component. In previous years, this was something that Netflix never had to count toward its revenue. So this is another avenue for potential growth. But we are seeing signs on our end, just on a macro level, like you mentioned, that yes, subscription fatigue is real. We see consumers, I think, on average are managing about 9 subscriptions per household, and I honestly think that's probably lowballing it, just at least in my personal experience. And so there is this concept of trimming some of that fat, trimming some of those lower lying subscriptions. So far, we don't see Netflix falling in this category yet. But I think that those cancellation mentions, that's going to be something that we really have to watch moving forward. And, we could see maybe some near-term choppiness, especially if Netflix does progress and does, boot people off of shared accounts, and if this causes any stir like that. But I think that long-term, Netflix has the best value proposition to streamers in terms of just the widest range of original content and a library of content that could play out nicely for it.
Password sharing has always been an issue with Netflix, Megan, as you know, and I have no comment on the fact that I had to join Netflix 6 months ago in terms of password sharing. I have no comment on that matter, but I do know they added 7.7 million new subscribers, so password sharing and that new advertising tier, both putting pressure on other streamers that, Megan, are having trouble being profitable where they stand right now, and Netflix just keeps pressing the gas on their dominant position, correct?
Yeah, whenever we look at just overall mentions, we showed growth there where Netflix is actually, growing market share in terms of the eyeballs on screens, but it already was the market share leader. And so it's rare that you see kind of the biggest player in the field continue to grow its position. For a while, as we saw new competition entering the field, we saw that dot shrinking for Netflix, but now we kind of see it shifting the other way as Netflix is a little bit more defensive, as it, is defending its turf really well so far. I think that this is a glimpse for now, and this is definitely something that we'll be continuing to monitor, but we're not seeing just a massive loss in momentum. I think that from a long-term perspective, we are still seeing consumers who are talking about cutting the cord and kind of switching to streaming. Now, obviously that growth has slowed down, but that pot is still growing. So I think that, Netflix is smart in that it kind of knows there's a little bit of a slowdown here, so it needs to kind of diversify and figure out how to pull in new accounts and also boost its revenue as that growth slows a bit.
Megan, you also had some data for us on Tesla that is up 62% this year in this category of winners over the first several months. Is this data holding up with the price action? And is a recall really a recall if you don't have to bring your car in, Megan?
That's a really good point, right? That's the kind of recall I would be hoping for if I was a Tesla owner, to be able to press that update button. One thing that we've seen that Tesla did was slash its prices on a lot of its model in January. And when we look at our data, you can almost point to the moment that they did this. When you look at the far right on this chart, that Q1 pace, those are consumer demand mentions just really in the month of January and February, and that's pretty significant growth. That's like the second highest rate of demand if it shakes out that way and continues in the way that it's pacing in our history since we've been following Tesla. And another thing that we see consumers getting really excited about is the Cybertruck. So I think that could also be another, breath of life into this brand, but it is smart that Tesla is kind of expanding its available audience by lowering that price point a little bit. And I think it's settling really well with consumers so far, at least in our data.
Megan Brantley, Vice President of Research at LikeFolio.com. Thank you so much for coming on, spending part of your Friday with us. Have a great long weekend, Megan.
Yes, you guys too. Thank you.
Joe,